Supply and demand zones are usually identified in areas where price moves quickly and then either pauses or reverses direction. In these areas, price tends to consolidate for a while before making a sharp breakout. This indicates significant strength from either the supply or demand side of the market. If you've been trading for a while, you've probably heard about the smart money concept. These zones are where smart money sets their orders. When price moves with strong momentum and large candlesticks, it's often these zones at play. When price touches these zones, it reacts swiftly, changes direction, and even breaks structures in the market. Let's explore what these zones actually are. First, you need to understand the three basic types of price movement. Rally, when price moves upward. Base, when price consolidates in a horizontal range. Drop, when price moves downward. For example, let's say the price rallies, then consolidates, and finally drops, breaking the last low it formed. The upward movement is the rally, the horizontal movement is the base, and the downward movement is the drop. In this case, the consolidation area during the base becomes the supply zone because this is where sellers dominated and caused the price to drop. However, price doesn't always move perfectly. Sometimes it breaks out of the horizontal box, the base, in what we call manipulation, where liquidity is gathered and stop hunting occurs. For example, smart money might collect stop losses from traders who set sell positions above the base. At the same time, they trigger buy positions from retail traders who think the breakout will continue upward. But instead of continuing up, price reverses sharply, taking out both groups and creating what we call a supply zone after the drop. Now let's flip the script. If the price drops, forms a base and then rallies, breaking the previous high, this creates a demand zone. Here's why. The base is where buyers and sellers fought for control. When buyers won, the price rallied. If the price ever returns to this demand zone, there's a high chance it will rally again because this is where buyers showed their strength. Supply and demand zones are essentially battlegrounds between buyers and sellers. For example, when price forms a base after a drop, it's like buyers waiting in ambush. They step in, fight off the sellers, and push the price back up. That base becomes the demand zone. Similarly, when price rallies, forms a base, and then drops, that base is the supply zone, where sellers overpowered the buyers. So far, I've explained that in supply or demand zones, the price either drops or rises from a certain level, moves sideways, and then changes direction to go against the trend. The first one is a supply zone, which is formed after a rally-based drop pattern. The second one is a demand zone, which forms after a drop-based rally pattern. When the price reaches these zones, it gets stuck, moves sideways to form a base, and then moves with strong momentum in the opposite direction. However, the price might move upward, form a base, and then continue moving higher. We can call this a rally-based rally movement. In this type of movement, when the price reaches a level where sellers are waiting, a battle starts between buyers and sellers. The price moves sideways, forming a base but later continues upward with strong momentum in the direction of the trend. The zone created here becomes a demand zone for us. Later, if the price revisits this zone, it could find support here and rise again, forming another rally. The opposite of this is called a drop-based drop. In this case, the price falls and slows down as it gets close to levels where there's a lot of buyer interest. It moves sideways in a zone where supply and demand are almost equal, forming a base. However, since sellers are stronger, the price drops with strong momentum, creating a supply zone. We identify this as the seller's zone or the supply zone. If the price returns to this area, we expect sellers to step in and push the price down again. As I've mentioned before, the price doesn't always move perfectly as I've shown you with the lines. This means that in the base area there can be fake breakouts that mislead many people and cause them to lose money. However, as traders, we need to be aware of these movements and manipulations. To enter trades successfully, we must have a clear strategy, which I will explain to you in the upcoming videos. I've explained the basics of supply and demand zones in this video. In the next videos, I'll break this down further into smaller, actionable pieces. So don't miss out, subscribe to the channel and follow along. See you in the next video.